And we are live. In case you were wondering, I come on a little bit early compared to when it's scheduled. I come on about a minute early just to be a little bit on top of it. So, this is Market Coffee Talk, and I'm Louis Yanis. I'm the founder of WealthNet Investments, and I'm really excited about the topic I'm talking about today because it is probably one of the biggest things that I've learned that helps me invest. And it also answers a lot of questions that I find that people have when they're kind of baffled about what's going on in the market. They're baffled about why things are happening. A lot of times, you look at what's going on, you go, why is the market doing that? The things look horrible right now. Or why is the market going down? The earnings are great. Or Tesla doesn't make any sense that Tesla is moving higher. They're not earning any money. There's just so many questions with regard to that because I think a lot of people haven't really learned how the market really works. When you go in business school, they teach you that fundamental valuation is the driver, how you should look at the markets. They teach you some modern portfolio theory, and there's all these different things that you learn, and they don't necessarily align to how things work in the real world. So what I'm going to be talking about today is I created two graphs that summarize and encapsulate two big theories of how to understand how the markets really do work. And before I actually dive into that, I'm going to have a sip of this coffee, and I hope you're partaking as well. So I'm going to share this screen with you, and I'm going to show you some charts. So there's basically two big things that I'm going to be talking about. Okay. The first is the concept of equilibrium versus fundamentals. And then the second concept has to do with the mood of the waves in the market. And if you get these concepts down, you'll have a much better idea about what's happening in the market and what you should be doing. So before I actually get into those, I want to make you kind of help you understand that these are like mental models. These are models that are not, the markets don't always perfectly fall into them, but they give you a good guideline as to how the markets are reacting right now. Okay, so let's just go ahead and dive in. I'm going to go ahead and get these fully expanded here. So there's three different things that you want to look at when you're thinking about the market. If you only looked at three things, this will help you a lot. The first is, what are the fundamentals? What are the earnings? And the second thing would be, what is the mood of the markets? What is the mood of the general population of investors when you turn on the television, when you read the newspaper? And then the third would be, what is the price action itself doing? What is the actual market prices doing? So this first concept I want to talk about is kind of shows the disconnect between fundamentals and price. So after you've come through a bear market, the red line here represents fundamentals. You can think of that as GDP or earnings. But after you've gone through a bear market, what tends to happen is the fundamentals keep going down, but the stock prices, which is the blue line here, the stock prices tend to stabilize. And I call that a near equilibrium state. I actually got the concept of far from equilibrium and near from equilibrium from George Soros. It's a concept that he talks about in some of his work. But the general idea is when you are in an equilibrium state, buyers and sellers are roughly close to each other. They're moving up and down, but you don't see big price movements. They tend to just move up and down, like you can see right here in this first phase. So in this first phase, the stock market is generally undervalued. Now, I'm depicting that by just showing that the prices are below the fundamentals. So prices are undervalued, stocks are kind of stabilizing, but the fundamentals, the headlines that you're hearing are going down. And this confuses a lot of people. A lot of people think that this market is about to crack, right? Fundamentals are going down. And then what happens is you have a breakout in price and the prices start moving higher. And when that happens, you kind of go into the next phase where stocks are rallying, but the fundamentals have not really improved yet, but they start to improve a little bit later. So that confuses a lot of people. And we saw that basically, think about last year. We had a bottom in the market, and then the market started moving straight up, but the fundamentals were getting worse and worse and worse. People were being laid off. It was not, didn't make any sense, right? So the market's moving well ahead of the fundamentals, but then finally the fundamentals do turn. When this happens, you're in a far from equilibrium state. That means that we're heading into a new equilibrium that's at much higher levels. And that's what we experienced. That's what we are in the process of experiencing right now. So you have this big move up, but the fundamentals quite haven't caught up to it yet. You can have some fits and starts in this, but this is the general phase. So that's kind of the second phase. And then what happens is stocks peak and they go kind of sideways, but the fundamentals still keep getting better. And this gets people really confused because it's like, well, the fundamentals are getting better, but the stocks aren't moving up. And some people will buy that rally or buy that decline or sideways movement, and they'll get it wrong. So the fundamentals are going nowhere or moving higher, but the stock prices aren't doing anything. There's kind of a divergence, a negative divergence. And then what happens is stock prices crack. And when the stock prices are falling, you still have the fundamentals moving higher. So people are saying, wait a minute, earnings are good. They don't really believe what's happening. So this is kind of the concept of near from equilibrium and far from equilibrium. So the markets are rarely in line with the fundamentals. And that's one of the problems with the way people learn in school. They learn that the markets should be in this equilibrium state. But when in reality, equilibrium moves far from and close to. So right now, it appears that we're in a markup phase where the earnings are not catching up to the price. And at some point, then we'll get into an overvalued state, which you could argue right now that we are already in an overvalued state. But the market can be overvalued for a long period of time before it actually cracks. And that confuses people too, because it doesn't, you have to be watching the trend. And that's the whole point of this exercise here in this equilibrium versus the fundamentals, is that prices will be leading the fundamentals almost always. So now let's talk a little bit about the next phase here. This is a different market model here, a different market mental model that is very, very, very valuable. So I hope somebody really tries to soak this in, rewinds, watches this again, because this can make you money and keep you from losing money. So when you think about the way the market is working, there's generally different psychological waves or stages that you are in overall. So now I'm going to talk more broad here. And what we're talking about is there's this cycle from pessimism to optimism. And it goes through multiple waves. There's impulse waves when the market's moving higher. And then there's these corrective waves when the markets move lower. So I'm going to go through them 1 through 5 and then A, B, and C. And just try to think about what you see in the market and see which one you think we're in right now. So, okay, phase 1, we've come off of a bear market, right? We've come off of a bear market, and then we have the first move up. So the first move up, the majority of the investors, they're convinced that the stock market trend is still down. Okay, so most people have been beaten up in the market. They're convinced it's going to continue to go down. The fundamentals are going down. So that's the disbelief phase, and people think we got to sell this rally. But what happens is people do start selling that rally as we get into phase 2. And again, most people still think there's a bear market, but the volume is really light. So the amount of people that are trading that sell-off is relatively low. What that's telling you is that most sellers have already gotten out of the market, and so there's not much selling left over. And then what happens in wave 3? In wave 3, this big long wave, that the market gets strong and you have a broad uptrend. What I mean by broad is that most stocks are participating on the way up. So you have a lot of stocks moving higher, the fundamentals start kicking in, and now you're in the belief stage. So that means, you ask the average person, they're like, yeah, market's good. They'll start, even talking, bragging about how they're doing. You'll see a little bit of that. And the fundamentals are improving. So everything is kind of in lockstep and everything is fine in the world. And then number 4 is this corrective wave down here. That corrective wave, meaning a little bit of a downdraft, you start getting complex moves. You start having more volatility, And some of the lagging companies, the companies that are not as strong fundamentally, they'll actually hit a top and they won't recover from that top during this phase in the market in phase 4. So most people still think the market's in bull mode at this point, but you'll start seeing what's called churning action, where you'll have high volume, but you won't have much price progress. You'll see stocks not moving up as much as they did on high volume. But most people are still saying buy the dip, and then that's what happens. People buy that dip, and then you go into phase 5. Now, in this phase, everybody is optimistic. Everybody is optimistic. Everybody wants to buy stocks, and you definitely hear people bragging about how they picked Yeti or some stock and how great it is. And but what happens during this phase is the rally gets narrower. There's less and less stocks participating on the way up in wave 5. So it's optimistic, but it's fewer and fewer stocks. And then what happens is you have a corrective wave after that speculative move. And that's, wave 5 is usually where the market tops. It could be an exponential move that moves really fast, but the market will top there. And then you have a corrective wave A, and people are still convinced that we're in bull mode because they're fully invested, right? But smart money is starting to exit. They're like, this market we need to get out of. So people start getting off of that. The smart money starts pulling out, but there are still, the majority of the public is saying buy the dip. And in phase B, you have massive rally here, another rally, but massive speculation usually. So a lot of the latecomers come. The public is highly invested usually. There's churning action in the market. It's very volatile and kind of crazy. The public gets involved, and I've seen this several times in my career, and it's crazy. And then you have a wave C, which is devastating. It's a fast sell-off. There's little upside corrections. It's just a fear-based trade. So you go from disbelief initially after a bear market, and then you go to a belief phase. Everybody's with it. The fundamentals are doing well. Then you get into this optimistic phase and speculation that goes rampant, and then fear. Then there's like a disbelief that the market is topping. Really, no one believes that the market is actually topping when you get into this last area. But then this thing sells off, and everybody just starts getting out. It's almost like a light bulb turns on. So I'm wondering where you think we are in this market. Do you think that we are in the disbelief phase? Do you think people disbelieve that the market is going higher? I don't think so. I think most people believe the market is continuing to go higher. Do you think there's speculation in the market? I would say yes. There's definitely some speculation that's occurring in the market. It hasn't gotten to the point where it's crazy, but there's definitely speculation in the market. Do you think there's any fear at this point? I don't sense fear. I sense complacency. Are the markets overvalued or undervalued? Well, if you look at almost every single metric, the market is overvalued. So remember, if you've been watching, if you came in at the beginning, and I'll go back to this first slide. This first slide is the equilibrium, the fundamentals versus the equilibrium. So we're looking at earnings versus the, is that showing? I guess it is. Hold on. Yeah, we're looking at earnings versus the actual stock prices. Well, right now, we definitely have earnings that are starting to pick up. We just came off of recovery, but the market is way, way ahead of it, right? So the question I think that a lot of analysts have is like, are we here in this phase in the middle, or with a lot more to go, or are we at the peak? I actually think that we're not at the peak, that we're before the peak, but we're starting to get longer in the tooth. So we came off of technically we just came off of a recession, and the markets are moving higher, but there is increased speculation that's happening right now. And as that continues to move higher, you get a higher and higher probability that we're hitting a peak in the market. So the reason why I brought this up is that we always get people who ask the question, why is the market doing what it's doing right now? It makes absolutely no sense. There's a disconnect between the earnings and all that stuff. So keep that in mind. So I have a challenge for you. If there's only one thing you did, and when you're thinking about your retirement accounts or whatever, look at 3 things. Number 1 would be read the newspapers and watch the news and just get a sense for the overall mood of the market. If the overall mood of the market is getting very, very speculative, everybody wants to talk about positive things, then that should be a warning sign to you. The second thing I would say is keep an eye of the valuations. Look at like what are the price earnings multiples in general for the market. If they're really, really high, that doesn't tell you to sell, but it's telling you it puts things in context that we're above the line, right? Like we are right now. And then also the other thing would be watch the market action itself. Is the market going sideways now? Or is the market moving higher, or or is it starting to actually crack and break down from equilibrium levels? That'll give you a good sense in terms of what's really happening. So right now, if you look at the market, we are still trending higher. It looks very healthy from a technical perspective. The price action, we're seeing strong volume on the way up and less volume on the way down. That's all good. So we have not gotten to this equilibrium phase, but we are above the line. So it tells you we're somewhere in here. That just gives you some context about what to do with your money, because a lot of people sell too soon. They sell too soon, and a lot of people get aggressive too late. And if you use these models that I'm showing you, it'll give you a sense as to what to do with your own money. So we're in a period where it makes sense to be cautious and manage your risk, but we're not flashing sell signals, even though we're extremely overvalued. We know that. So what I would be looking for right now is the market starting to move sideways, even though the news is good. So let's say we open up and we have a recovery, and everybody gets the vaccine, things open up, and the earnings start moving higher, but then the stock market goes sideways or starts cracking. That would be a sign that the bull market is over. So don't get confused by those things. Watch those three things, and you will be a much better investor. So like and share what we have here. Join me in the mornings. You can comment, by the way, and then we can have discussion while I'm talking. You can comment. So I'm definitely willing to have some conversation with you. The last thing I would say is if you ever want to have a second opinion about anything, if you need any help with anything, just go to talktoluisyanis.com. It's kind of scrolling on the bottom. Talktoluisyanis.com, and you could set up a time to talk to us. All right, I hope you're having a great day, and here's to a wonderful, wonderful year. Take care.